Hi, this is 22nd of November, it's Tuesday. I have already commented on my blog about oil, DAX and Dow Jones. I want to make a video about the FX pairs that we're trading, pound against the dollar, in this particular case euro against the dollar. Let's see how the day started. There was a drop just before Frankfurt opened, a little further drop after Frankfurt open, and there was nullified about London open. London went the other way. Now that was quite nice. This is a breakout. Unfortunately, we need to wait for a signal, and the signal is actually at the end of this bar here. So we had already we're already a little bit late to get in. But that's a signal, and the market is rallying, so we buy. First little problem we have is this one. The market had some resistance up here, and you would be entering quite close to this resistance. But as I say several times, this happened at about 5 o'clock in the morning. This happens at a completely different time of the day. This is all the new orders are coming in. London is open, and I think that this is a high probability trade. Now you go up there, you have your some points. The euro doesn't move as much as the others, and you have a retracement. Now, I just want to show you this. You can do two things. One is, usually you can enter with two lots. You have one out at 10 points, let's say, and you put the other one at break even. If you did this, you probably would have been stopped out here. Or you just leave a little bit of leeway to the trade. And you're playing the longer game. The longer game for you is, well, the market is gonna check this level here, which is a resistance coming from yesterday, or this level here, which is the R1. However you play it, the market is going up, so either you just prefer scalping and you enter here, and then you enter here, and you have another one up to here, and then you have a retracement, and then the market goes up, and you have another one here. This is probably not a good idea to take. It's the third leg, and you enter too close to R1. But you can actually use what I call the advanced trade, and for that, you must be on the trend. This is an uptrend. The market has a pullback. It does bounce on some important point. In this particular case, the moving average. It's usually the moving average, and there is some sort of reversal bar. So here you could have entered. Yes, it was a little bit risky because the market may refuse and reject this high here. But I think it was okay to try and see if it reached the R1, and in this case it did. So again, depending on the kind of discretionary rules that you're using, even if you're using the standard rules, you had quite a lot of different possibilities here: getting in and out, or staying in up to here. This was after we stopped for the morning. See what happens here. The market went back, basically retesting the low of the day. And again, this is, you know, London open, this is New York open, this is when probably new orders are coming in on the FX side. The market bounces back, and it stops here at the first, the fast moving average with the pivot point. So there is a kind of rejection of the pivot point. You see this doji here. I don't like this doji. I would prefer to see a real reversal bar. But on an aggressive mode, you could have actually started getting in again here. This is again an advanced re-entry, the same that we've seen here, but here we had a much better reversal bar, with the idea of testing this low here. And in fact, this is exactly what happened. And notice that this testing here, it's 106.03, 106.03, 106.03. So this is very close to big round number. So the big round number acts as a magnet in this case. I didn't put this in the journal because it was a little bit too advanced, perhaps, but this was definitely a very good trade to take, especially considering that there was no news at 1:30 today. Here you wouldn't have been triggered, but you would here. And what happened here is you have your signal here. This is way too close to your big round number and your big support here. So you really, all you can do is you can enter for a scalp to S1 by giving a little bit more space and entering way below this big round number. So that was another very good trade. But again, it was a scalp. This is all the market could give today. Now let's see cable. Cable was much more frustrating today. And again, this is an example of how you can actually watch the markets all day long and all you can get is one valid trade. First of all, we are on a sell signal here. And there is a little breakout of this, but you don't really want to do this because it's very, very close to the low of the day here. And you don't have enough space, so that is filtered. Then you have a buy signal here, but you see it's a complete reversal and it comes quite late. And so the high here is 90, this is 91, so you're not really triggered here. And even if you are triggered, you shouldn't. Even if you are triggered, after half an hour that the market doesn't do anything, even more, you will go out at break even, really. So nothing done here. And then you have a sell signal here, and you have to wait. And unfortunately, it goes after the 10 o'clock. I mean, it's not compulsory to stop at 10 o'clock. I use the rule to stop trading at 10 o'clock for a number of reasons. But if you want to use this signal, you really have to wait for the market to clear this support here. And that would have been the trade. According to the standard rules, it wouldn't have been valid because the entry was here at 10:15. In the afternoon, so really no trade here. A great trade that you missed. Great. In the afternoon, you have this. You are on a sell signal, and the market goes down and breaks this low here. You can enter here. It's very aggressive. You can actually enter a little bit below here on a 20. You could have got your 10 points. The idea was to get to the big round number, but if after all this time it doesn't go there, you just take 10 points and put the rest at break even. So that was the only trade that was available. Here you don't really have a clear reversal bar. This could have been one, but it was above the moving average. This could have been another one, but it didn't clear. So you would have entered probably here, and it was really too close to the low here. And if you want to use this one, well, you better not, because the low here, it's 24.08. You would have entered at 24.06. It was too close to break even. Sorry, too close to the big round number. A better idea could have been this one. See, the market had a bounce and then was testing again this one. But again, number one, you don't have a real reversal bar or reversal pattern here, and the 2 moving average were well penetrated. And on top of that, you didn't have the signal. The signal was here. So nothing to be done in the afternoon. Very frustrating day, but you know, at least you had 2 or 3 or 4 probably little scalps, and everything counts.